Hey there, I wanted to show you this because this is what the data is showing, and I think it's not completely obvious to what's happening. You guys have been seeing the stock market hit all-time highs this past month. But when you show the data, and what I have here is the federal funds rate. This is spanning from the 1960s to the current 2024 era. I want to hold your attention to is what I highlighted here in 2007 July. This was the peak of the interest rates right before the recession. In the last, I would say, four times, or maybe even five times, what you've seen is the peak of the interest rates is what the Fed does to pull back inflation, but it also, in a way, poison pills the economy. And what you're seeing in the gray are the recessions illustrated here, which is coming right after that peak inflation. Sometimes the interest rates can actually be pulling back, which I think we'll be seeing here in 2024. But if history is going to repeat itself again for the last four times, you're going to start to see that gray band show up, which is the recession, which means that the all time highs of your mutual fund stocks, 401ks, is going to be taking a tumble. Now, this is a time to be moving out of that into other non correlated assets. And what we've seen in commercial real estate, at least, it has been a correction of 20 to 30% in terms of pricing off the highs. So you're not only going to be getting away from a hot asset class, but into an asset class that has gone through its hard landing over the past year. So again, look this stuff up but for yourself. Take a look at the correlations between the peak interest rates and the recessions. And it's obvious right here, right? History is going to repeat itself. And I'll call it. We're going to start to see a recession either later this year or early next. Where you're going to be doing about it. This is your fair warning right here.